So how does technical analysis work? What is technical analysis? As I said in previous videos, technical analysis is the instrument that I personally use the most. I also use fundamental analysis, but I mainly use technical analysis. So let's see in this video what this instrument is and how it should be used. Hey, it's Dario and this is Divity Trading, a platform where we can share our best tips and tools when it comes to trading, investing or finance in general. And if you love the subject, please consider subscribing. There is always a fight between fundamental analysts and technical analysts, but actually these two instruments are truly so much different and they give a different information about the stock. And also we should mention that many technical analysts don't really know what technical analysis is. They think they know, but they may not know it exactly. Fundamental analysis is pretty easy to understand. You watch the company, you watch the balance of the company, you watch the growth, and you see if the company is undervalued or overvalued, if it's healthy, if it's not healthy, and so on. But technical analysis, what is technical analysis? What studies technical analysis? Where does technical analysis come from? Those kind of questions are fairly hard to answer, especially if the technical analysts hasn't studied deeply the instrument. But hey, before we start, if you enjoyed the video, please leave a like and let me know in the comments down below if you prefer fundamental analysis or technical analysis. So let's first make a little bit of a comparison. Let's see what differences there are in fundamental analysis between technical analysis. So basically fundamental analysis, it's the study of the company itself. How the company grows, what is the sector of the company, what is the earnings, what are the revenues, and so on. So actually with fundamental analysis we understand what are the motivation for buyers and sellers to push the prices in one direction or the other. Whereas with technical analysis we study the behaviors of buyers and sellers, and that is done through the price, because the price reflects the behavior of the buyers and sellers, which has been influenced by the fundamental aspects of a company. As you see here, fundamental analysis and technical analysis actually give two majorly different information. So why should you use just technical analysis or fundamental analysis when you can have a much more complete analysis of the whole stock with both of them? But now let's dive right into technical analysis to understand really what that is. So basically the markets give us two information, price and volume. Those two things of course are the reflection of the behaviors of buyers and sellers. We have the price, which is the aggressiveness of buyers in respect to the sellers and vice versa, and then we have the volume, which is the amount of contracts that has been exchanged between the two parties, so between buyers and sellers. Remember one thing about the market if you're not yet familiar. If there is a dollar bought, there must be a dollar sold, and if there is a dollar sold, there must be a dollar bought. If the price goes up, it doesn't mean that there are more money coming in than money coming out. There is always the same amount of money coming in and coming out. If a price goes up though, it means that the buyers are more aggressive than sellers and they want to enter in the stock even though they have to pay higher and higher prices. On the other hand, when we see the price going down, that means that the sellers are more aggressive than the buyers, and so the price goes up because the sellers accept to sell their stock at a lower and lower price. But how do you form theories based on buyers and sellers? Well, first of all, we have to understand that the combination of buyers and sellers is a mess. So it's a mess of people, M-A-S-S. It's a mess of people. It's a big group of people. And so from this point we can understand that technical analysis studies the behavior and psychology of masses. And so here I can quote Alexander Elder, who is a psychiatrist and wrote some books about investing. And also he quotes Le Bon, who studied the mass psychology in the 1800s. Le Bon is a good example of how technical analysis is based on studies that are actually made hundreds of years ago, something that has been studied and deeply studied. So it's nothing really new or innovative or magical, because it's about psychology. And we studied psychology all the way back to the 1800s with, again, Le Bon. Le Bon doesn't study technical analysis. Le Bon is not an investor, and that study has been read by many people. And also in this sense we can quote some people that were present in Europe. I won't quote the name because YouTube is going to probably take my video down, but you can imagine who would need to study the psychology of the masses in order to influence those masses. But the main principle here that we want to understand about Le Bon is that the mass is not a person. So actually, when you see a mass of people, you want to see the mass thinking as an individual, because many individuals could think differently, and many individuals could even think differently from the thoughts that we see of the masses. So actually, when an individual is a part of a mass, he loses his thoughts and condenses with the mass and forms a unique thought which is different for all the thoughts of the individuals composing the mass. I know it's difficult. I will put a link in the description for the Le Bon studies. If you want to study them, study them. It's not essential, but I think it's good to study. I read the Le Bon studies. I didn't thoroughly study everything, but I read the studies. So actually the main thing to understand here is that by looking at the prices, we look at the behaviors and psychology behind the mass that move the price. We don't care if one analyst or one trader or one investor thought that that stock could go up or down. We care if the mass thinks that the price should go up or down, and we understand these behaviors and psychology by looking at the chart. And here we need to make another assumption. The psychology of people and the psychology of masses does not change. It might evolve a little bit because we change the century, because we modernize ourselves, but it doesn't fundamentally change. The emotions are still the same. When people fear, they sell. When people feel FOMO, the fear of missing out, they buy. So again, the psychology of the mass, it's always the same. It remains the same. That's why technical analysis can work now and will probably keep working. The thing you have to understand is that technical analysis is not trend line, it's not directional movement, it's not the RSI, it's not the MACD, it's not the Ichimoku clouds, it's the psychology of the masses. All the other instruments are derivatives of price and volumes, and price and volumes reflect the psychology and behavior of the masses. So by looking at the indicators, you look at a condensed information, you look at a recap, you look in another manner the price and volume that you see on the chart. So you look in another manner the psychology of the mass and the behaviors of the mass. That it's all you should understand. If you understand this, if you truly understand this, you will look at the single candle with another perspective. When you see a candle, you don't see the price moving. You see buyers and sellers fighting for the price to go up or down. If the buyers are stronger, the price goes up. If the sellers are stronger, the price goes down. Then of course we can use some terminology to simplify this discussion, but again the fundamentals are these ones. You have to understand this if you want to use technical analysis. If you don't understand this, you will use technical analysis in a wrong way. So thanks for watching. This is all I had to say for technical analysis. If you enjoyed the video, please leave it a like and let me know in the comments down below if you use technical analysis or fundamental analysis, and I'll see you in the next video.
Oh my god, look at this kid who wants to teach me about high yield investments program.
With the promise they are going to give you a high yield return. The problem here is that they give you a certainty. They will tell you that they will certainly pay you a certain amount a year,